Hello, I'm David Cassidy with the Daily Market Update. Today, Wednesday, the 20th of May. US equity markets fell heavily in the last hour of trading yesterday, 8 to 9 p.m. UK time, after STAT, a medical news site, published an article that questions Moderna's coronavirus vaccine trial results. As we stated yesterday, Moderna's vaccine news was not a complete game changer due to its small sample size. A phase 1 trial involved just 45 people, which is obviously far too small for any reliable trend to be determined. However, it would appear that many market participants completely overlooked this fact. As a result, the Dow Jones closed just over 390 points lower, or 1.59%, while the S&P 500 index fell just over 1.05%. The FTSE 100 is currently over 6,000 today, up just over 0.5%. As we previously said, because equity markets hate uncertainty and the coronavirus outbreak is a big uncertainty, they are currently trading on every news headline, and over the coming weeks and months we will probably have to live with taking 2 steps forward and 1 step back, which unfortunately means that equity market volatility will remain elevated. Additionally, and far more importantly, rather than focusing solely on Moderna's small sample size, there are many other companies around the world working on a vaccine, and so the chances of a breakthrough are probably not too far away. And of course, a vaccine will speed up the economic recovery. Of more interest to us yesterday was a Bloomberg interview with the Bank of America CEO, Brian Moynihan. He stated that in the first part of May, consumer spending and borrowing activity was only down between 2 and 4% from the same period last year. He also stated that requests for loan payment deferrals were starting to come down, and that those customers that had requested a deferral, of them 40% didn't skip their loan repayment, which suggests to us that bad loan and credit damage that the big US banks have provisioned for may not materialise, and that the US economy could quickly bounce back, especially given the fact that Advance Auto Parts, a US company that is similar to Halfords, said its sales were currently about the same as last year, while Home Depot in America, the US equivalent of our B&Q, said that its Q1 total sales growth was 7.1% and Q2 sales growth had accelerated into double digits. In the UK this morning, the 20th of May, UK CPI inflation in April slowed to just 0.8% from 1.5%, while the core rate, which excludes volatile energy and food prices, slowed to 1.4% from 1.6%. This reading will undoubtedly result in even more speculation that the Bank of England will take UK interest rates below zero. Additionally, as the headline rate is less than 1%, the Bank of England's target is 2%, Andrew Bailey, the Bank of England governor, will have to write to Rishi Sunak, the Chancellor, and explain the reasons for the decline. Although they are pretty obvious, the downward pressure on prices predominantly came from fuel, which fell 13.1%, energy fell 9.3%, and clothing fell 3%. While we wouldn't be surprised to see negative interest rates in the UK, the coronavirus is making it hard to accurately interpret the inflation data, as the lockdowns are changing both what we are buying and our perception of inflation. For example, the lockdown means that we are currently unable to take advantage of the cheaper fuel costs, while buying a new outfit or a pair of shoes isn't really a consideration. However, our food costs have increased, with meat 2.9% more expensive and alcohol and tobacco costing 2.5% more. Later today, from 7 p.m. UK time, we will get the minutes from the Fed's meeting, which was held on the 28th and 29th of April. although much of the commentary on the employment market and the inflation will be dated, we will be looking for comments around the potential for more stimulus and the potential for negative US interest rates.